we're going to do some market awareness here, okay? So I said we're going to do a little fireside chat, too. We're going to do a little talk here. So that we have to do some correcting here. I saw some commentary yesterday in it was really bizarre. I saw a lot of I keep seeing commentary, and I saw it in the chat briefly yesterday. And I saw it briefly yesterday and said something about bulls being caught with their pants down. So way, way, way back here. This is back on July 27th, right? Just want to be clear here that we called this correction right there on that weekend. This is actually a weekend we made videos about expect a correction, right? And we expected this correction. Matter of fact, I'll show you the video here if you want to see it, because we did make it public. We put it in the Discord. But I just want to make sure that we're clear here. No bull was caught in this correction. Not in our trading group that I know of. We ended up knowing that we were going to get a correction over here, and we knew that it was going down to somewhere along that 430. Now the issue comes into play somewhere down here. We ended up trading 428 somewhere down here, 428, 420. Now this next leg down right here, definitely not part of the plan, right? 420, not part of the plan. Excuse me, 424, not part of the plan, and then definitely none of this part of the plan. This part of this correction right here, the only thing that I would say on this part of the correction would be that we did note that this isn't even corrective, right? Hold on here. So this isn't actually a technical correction. I'm going to get the measure on this. So from this peak down here to this trough down here, do you remember when we went over this and said, it's 6%? You know, not even technically a correction. You need more for a correction. So no corrective behavior here. Now, all of this crap that's been going on down here, definitely not anticipated. Wanted a touch and go for end of quarter. For end of Q4, has not happened. We've rolled down into the center strike of the SPX JPM collar, running right down into it. That collar, I believe, is at 4005, and it's like a magnet below us at this point. But we have had indicators that we are going down. So you can actually see this last bear plane, and it has not changed. I want you to see this here, how it says bear plane right here. And whenever these come up, it tells you when we're bullish and bearish and when to take stuff off. And you can see that major cross right here, this bear plane that took place back in October 18th for this next leg down. And what's fascinating about it is that spec growth stuff, I ended up exiting all that spec growth stuff, but not the Dow Jones Industrial stuff that I owned. Most of that stuff is printing right now on their ER reports. The troubling thing here is we talked about threading the eye of the needle, and we failed to do that last week. I made some posts on Twitter where I said the bulls need to thread the eye of the needle and escape this daily and weekly and begin to make their way higher to escape danger, right? And they failed to do that. They failed to do it here, and they failed to do it here. But it's the bizarre part about some of what was said yesterday is that there's no bulls in here that are feeling safe or feeling like they can buy the market. And even in all of this action, none of this is bullish unless you begin to make your way higher and take out previous highs on these higher time frames. Now, what this has led to in the market, into the marketplace is something very dangerous to the market that wasn't here until yesterday. And this is where I get really concerned here. This is where my concern comes in to this market. And I need to explain it to you in a better way. I don't know how to explain this better to you. This market as a baseline goes up and to the right. Whether you believe that or not, that is the truth. Number two, with that being said that this market goes up and to the right, I can't count on my hands the number of times that a bear will come out, or a seller, or the loudest voice in the room will come out and say, I told you so. I told you so. We were going to crash or correct or whatever. Now, I've put out one correction video. Well, I put a series out of 3 or 4 correction videos. They all started on up here. Okay, on this high back here. What you haven't gotten from me is expect a correction here, 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 here. You know what I'm saying? It's like you're wrong, 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 right? The one time you're right, you say, bulls didn't see it coming. But bulls did see that correction coming. Do you get the point that I'm trying to make here? So the idea here is that we gave you an alert of the correction coming in the marketplace. And so often you'll hear people say we're getting a correction. Do you guys remember when Mike Barry made that prediction 2 days later? He just did a victory lap today or yesterday on that correction call. And he called that 2 days after. Matter of fact, in that video, I said, expect guys like Mike Barry to come out and call for a correction. So the idea here, the idea I'm trying to point out to you here is that I hear these weird things from people saying, they're right, they're right, they're right, they're right. But these same people are calling for corrections here, 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 here. You know, it's like 1, 2, 3, 4, 5, 6, 7, 8, 9, and then you finally get the one that works, and you called it, right? You can't be right 1 out of 12 times. Does that make sense to you all out there? Now, in this corrective move that we've had here, there's more danger here than it would seem. And so I issued you yesterday not just a corrective warning, but now a crash warning. And the reason why I'm telling you this is, and someone said yesterday, I told you. And what you can't do is you can't issue those, we're going to crash, or we're going to do this, we're going to do that. If you do that 12 times, you're going to fail at it, right? The one time that you're right, you're going to be right. You need to see the confirmation of what's taking place, and then say, hey, this is the warning, this is the confirmation, we're going up or down. This is up or down. Doesn't matter if it's going down or going up. And so what I want to talk to you about here is this cross above. And just like this correction back here, right? And why didn't you call a correction cap? Why didn't you call a correction here, 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 here? Is the same reason why you don't call for further downside to come over here in this correction. Does that make sense? You need to see not only the price action, but the indicators tell you to be afraid. So this cross back here on SPY, where this daily trigger is crossing this weekly trigger, is extremely bearish, extremely, and very dangerous to the marketplace. Not bullish in any way, shape, or form, and it's giving you a warning. This cross right here is giving you a warning. It's telling you ahead of time that there is danger in the marketplace, plain and simple. And there is no danger in the marketplace until that cross happens. There's no danger back there. There was no danger down there. There was normalized markets. And even down here, This has all the signs of a normal correction, not a crash. And you shouldn't take it as such or one until you see that cross up here. You'll hear that cacophony of faces and noises and speaking and all of that. Even if price was to drop, but you did not have the cross and price. Here, one second here. So let me give this in a better. Let me explain this even better here. If you didn't have this crossing of the orange and yellow, and that's not there, right? If you only had price cross down, and then it bounced way up and escaped this cross down below, right? If it just escaped, there still would be no risk of or major risk to the market. No major risk to the market without that cross there. But with that cross there is a problem here. There is a major issue inside of the market. Now, it can resolve itself to the upside. SPY can squeeze back up and carry about its merry way. It can do that. Right? You can do that. We can get price back up here and continue on our merry way to the upside. But bulls are not in charge of this market in any way, shape, or form. Bulls need to know that not only do they have a lot of work ahead of themselves, but they likely are in some high danger. Now, that high danger that they're in should give them, anyone that is long, if anyone is long this market from up here or over here or anything like that, they will still be likely given ample opportunity to exit the market, okay? Exit the market or reposition the market. And even saying that, you might say to yourself, well, Cap, this is really bad here. They still need to confirm that cross with price on the way down. Now, let's say we squeeze up here to this 429, right? So we squeeze up here to this 429. We'll just make it green. We'll make it. We'll color code it simply for you, right? Let's say blast down here. You're still going to get the squeeze up here. Is my point, and you're actually right back to this zone of where the original correction was. So there's not really too much lost if you exit the market in an orderly fashion to the downside. Okay, so there's a couple points here. You've been warned, right? You have warning here of a market being very dangerous now to be long in. And that's from this cross above. Saying that, there is a very low probability that we blast down here and do not come back up to this cross or this daily trigger at some point. At a minimum, you're going to see this market oversell and squeeze back up to this daily trigger. It's got a probability of about 80%. It's that high that we come back up here to this daily trigger. So be aware of that you will be given opportunity, an ample opportunity to escape whatever this is back over here, okay? Whatever this sell action is up here. Now, saying that, what does that mean for more downside to come? What are the implications here for sellers? Sellers are in charge right now, and all they need to do is sit up here and wait to sell this next leg down over here. That's usually how the market goes, okay? So you have the warning right now. It doesn't mean we're going to crash. It doesn't mean that the market is in full doom or that anything is bad. And myself, I'm not going to become a bear unless, like, if you want to see a bear suit, it would be with price action just like this right here, where you get the rejection off the cross and we start heading down. And I am going to be trying to positioning myself short here for that eventuality. Whatever this price comes up here to this daily trigger is where I'm going to be looking to get short heavy into spring and fall. Excuse me, spring and late winter and early spring is somewhere up in here. Now, if we don't get up here and roll down, if we don't get the bull plane again to go to the downside, no harm. If we start to trade up again, we trade up here and we get above and start consolidating, heading higher again, no problemo. But if we get that bear plane up here again, it's going to be messy to the downside. And you need to be aware of it because you should then get extremely, extremely bearish. This is the door closure here for bulls. Okay, this is, if bulls had a door being closed on them, it's right here. So if you were to write door closure right here, close the door on bulls. It's right here. There's a door closing the door on them and an eventual real true crash. You should see a monster nasty event after this. Some kind of disaster here for the stock market. I don't know when or how that happens, but if there is a rejection, here, you are going to expect this market to roll down hard and heavy, brutally to the downside. And you need to be aware of it as a bull. As a buyer of this market, you need to be aware of the importance of this one specifically. This one, not important. This one, not important. None of this is important. None of these corrections are important. This is take the money, take your profit, and run. And as a matter of fact, the market is still up on the year. So we're not red on the year. There's nothing negative here. If you go back to October, when we got long, we're way up on the October run. So all this structure in here, you're still being given opportunity to get out. But I'd have to make it very clear to you out there of the danger here. This danger is not the same as any of this danger. If you squeeze up here, right, you're still at these levels that we had prior to any of this corrective action. It's this door closure here where things get really, really spicy. You really start to put, someone asked earlier, do you watch order flow? If you see this rejection here, if you see that rejection right there, right? You see this rejection right here. This is where your order flow is going to matter. This is where you're going to see your cascading sell the market triggers that you're looking for. When you see, I saw people saying this is like Black Monday or 1987. 1987 was one day straight down to the depths of hell. They couldn't even make a market on it. This is at best a correction at this point. It does not fit the bill for a crash. It is in no way, shape, or form that, but it can become that, and it'll be violent to the downside. Like we're talking straight down violence in this market if you get this corrective action here. So this is SPX. So let's say you have more blood down here, right? We squeeze back up here. This is really the trade that's nasty right here. Make this white right here. Oh, no, 1.4 points. Hold on a second here. What is going on with this thing? So I'm not really too concerned with if we bounce off hourly trigger. I'm not really too concerned with the bounce right here, but I'm mostly concerned with this action here. This is where things get really bloody. So we start heading down into that 350, and you start to get real nastiness down here. So be aware of this cross up here. Stay focused on this cross. It is important for you to pay attention to what happens up here. Any of this action up here, any kind of rejection up here, currently sitting at 4302. Any of that corrective action down here, any rejection up here, get scared. When we're down here like this, I'm not scared down here. When we're down here, I'm trying to buy a dip. When we're up here, I'm trying to take the money and run. So take the money and run, looking for a dip to buy down here. Does that make sense? Not trying to sell this, not trying to sell that, trying to sell that. Does it make sense? Trying to sell the new high up here. but not trying to sell this stuff down in here. Not trying to sell that, not trying to sell this. Like bearish, starting to get bullish, starting to get bullish for this upside move. Now, saying that, with this cross right here, instead of trying to buy this dip and thinking, yeah, it's going to recover to the upside, right? It's okay. And so instead of saying, yeah, we're going to buy this dip and we're going to continue up here, it's, we'll buy this dip, but I'm not buying and putting any money in this market. Does that make any sense? There's no confidence in this market. Zero confidence here. Does that make sense? So zero confidence in the market with this cross, and buying this dip is with low confidence of going up here. There's confidence to here. There's just no confidence of continuation, V-shaped recovery to the upside over here. Like I have almost zero confidence in this here, coming up here and then doing that right there for that inverted head and shoulders. I have no confidence in that right now with this cross here. Zero, none, zero confidence. So this warning is in place. This warning does not come off on the market until it resolves itself. That would mean price would need to. That would mean that price would need to not only get up here, but get a new high, consolidate, and begin to make its way higher over here. Okay, so right now you're in bear mode or bearish mode. Actually, we could do it like this. Excuse me. Then you would do that break there. And this is where I get bearish. And I become bear, like bear suit, bear danger, Will Robinson. And we're going to go back down and we're going to trade that 3,500. Way down here, actually. Went up trading all of that. We'll trade at least 3,500, possibly even lower. So this is the concern, right? This is the confirmation if there's rejection for put the bear suit on and start getting worried. If you want that major move down, that actual crash, the actual bear markets, the actual bear town, or more than sell the news, any of that kind of stuff. This rejection right here is the one that you want to be watching out for. Now, why else should you be having concern with this here? I'm going to show you why right now. You should believe this is going to take place. And we're going to look at some of that stuff right now. So and my real cause for concern here is on SPX, on market breadth, and more specifically on PMIs and PPIs. Now, I have less hold on a second here. I have less concern. Is this? Oh, wait a minute. Hold on. MBI. Hold on a second here. So here's SPX right now, still on trend, right? You see SPX still on trend here. Has not broken trend from its October low, right? Still on trend to the upside. People don't like to use the October low. We're still in an uptrend on the daily. Here's SPX. Here's the channels. We have not broken upside trend. Take a snapshot of this. We have not broken trend. There is no break of SPX trend to the upside. Full pullback here on trend, though, is happening right now. Now, there's concern, though. And this is what traditional stuff doesn't show you. This is where that you have that cross of the daily and the weekly here, right? And the cross of the daily and the weekly is saying, we're sitting on this channel. You should buy it, but I wouldn't trust it, Cap. Right? It's looking for that bloodbath down here to the downside. And it's like, why is it looking like that? Why doesn't it just continue to have continuation to the upside? We already have the triggers telling us why. But here's another reason why that you should be not quite scared, but have some cause for concern. The first one here is this PMOs, excuse me. And I don't like seeing this PMO with no, with this white not crossing to red to the upside. So this PMO is telling me no. This PMO does not have, wait a minute here. PMO is not showing me any kind of reversal at this time. See this reversal here to the upside? No reversal here in PMOs. And then PPO is saying the exact same thing. Hold on, we'll take a look at PPOs as well. I said PMI. Did I say PMI? I said PMI, I think, like 5 times. PMI is, PPO is saying the same thing. And you can see this bloodletting down below. And there's no reversal showing, is there? See that nice reversal right here? See this nice reversal right here? See this nice reversal to the upside? Nice reversal right here. And even a nice reversal down here. Nice little relief rally, right? You're not seeing that yet here. I want you to see that. These PMOs have not yet turned around, right? Not yet shown any kind of, hey, we're going to start turning around here. And we're parked down here in this on this monthly trigger right now, and it's showing, maybe not. We keep going down, right? So this is my danger sign right here. This PPO is saying no bottom yet, Cap, and not only that, due to these new lows over here, look at this low over here, right? This last little bit right here, wham! This last little bloodletting, woof, straight down. So any kind of relief that you see, any kind of squeezing that you see is not to be trusted, is my point. Not to be trusted. If you start to see the market begin to squeeze to the upside, it's not a function of a turn in the market. Right now, it's more of a function of just squeezing for better positioning or more downside to come over that cross PMOs and PPOs. So PMOs, PPOs, and the triggers are saying bad news coming. This is not the dip to buy, or if you buy this dip, not to expect much out of it. You can expect that if you want and expect that, but likely more downside to come unless we have some resolution to the upside. So you can get above that 430. So the expectation here is any squeezing should be followed by rampant selling and more crazy downside to come to at least that October low. Excuse me. That's 3,800 to start with right there. But it doesn't matter. It's going to go down to, we're going to hit the October low, and we'll end up hitting that 3,500 as well. It ain't going to matter because we're going to come back up here again and sell all this shit. We'll end up selling this up here. And then we'll end up selling all that to the downside over there. We'll end up tagging this one right down here, I believe. Yeah, right down there. Into February and April. So just be very careful here on this stuff here, on these continued moves to the downside, okay? Whatever squeezing this is, PPOs, PMOs telling you we're extremely bearish, not just oversold, bounce shit, but more like on this right here, this maybe something like that to the downside right there. So be very careful of all of this down there as time moves forward. Now, if we're gonna look at the JPM collar over here, we can change this out. We are coming into, this is the JPM collar for the quarter, and you can see we're trading that right now. We're trading that magnet of this collar, and we should bounce off of this collar and not print anything underneath this. Now, that's what we should do. One of the dangers here is we do have I think we have an example recently where we did trade underneath it, and this is where it gets super scary. I want to show you this prior example right here. This is May of 2022. We traded below, right? Here's that 48.85. You see the bloodbath down below, right? Come back up underneath it. And then we get into the second month of that quarter, and we're raining down, aren't we? All right, blasting down, bouncing back up, and then getting underneath. And look at this really quick. Right back up to the bottom of that collar. So things could get spicy here, couldn't they? Things could get spicy. We have an example of it back here. So this is that 34.20 down here. If they break below this and start holding, any kind of squeezing up here isn't going to matter, right? They blast us down here and then park it back up here for this close on December 31st. So there's real danger here into the end of this quarter of the push underneath and then the slamming down to that 3,400 and cascading. So I'm going to leave you with a couple things here. If we begin to trade this, right, bad news ahead, market crash. Okay, 3,420 is definitely on board. So that 4055 is a key number for you in SPX. If we catch the bounce off of this collar, right, and we still come back down here, same thing. Super danger into end of Q4. And that's where you get your crash from. That's how you get down to that 3,500. You can even go below it, believe it or not, and suck yourself back up. Now, is this going to happen? Is there like a 100% chance of this? No, there is not. Is there a 70% chance of this happening? No, there is not. You need the confirmation up here to make it like a 70% chance of this happening. You need to know for sure on that daily trigger and that weekly trigger cross, and that would ramp up a very high probability of seeing that 3,500, possibly even into the new year. So be aware of this as we come into this weekend, next week, into the second month of the fourth quarter. We're coming into Wednesday rate decision, right? And you've got two days off, right? So we got Saturday, Sunday, Monday, Tuesday, Wednesday, and you're going to see sellers here trying to pin this market into this Fed decision, right? Park it, and if you get that bearish Fed, it's straight down. There's your rejection. If you get the dovish Fed, there's your squeeze to the upside. But be careful of this into Wednesday, okay? So Wednesday upside target, 420, 422. And we're going to chart this out for you right into next week here for these earnings. So here's your hourly trigger right here, right? Your hourly trigger on SPOOs currently sits on 414.18. So we got Friday, Monday, Tuesday, and Wednesday. This is the Jerome Powell, right? It's going to be the Powell presser. J-Pow, 2 p.m. Leave it right there. And your daily trigger is currently at 429. Whoop. And this is going to march down to right here by next week. So this is your daily trigger, right? It's currently sitting right here. Your daily trigger. It's going to march down as we come into Wednesday. It's your monthly trigger right here. Right there.
Looking now to the
sell that hour, sell that hour. Slam, slam. Down to that hourly trigger. Slam that hourly, slam that hourly. And only if we get good reports are you going to begin to, only if you can get above this stuff right here, you're going to even consider. That trade right there. Only if you can get above this where's that hour right now? That right above that 414, 415, unless you can get above that 415 to trade that 420. Yeah, there's that squeeze up higher, 430. And then your bloodbath right there. On expectations into Monday, upside target 415.71, more than likely 414 on Monday open, and then a pullback down here to find out if we can go back up and try to trade this. And we're likely going to trade this 414 into Wednesday for the decision. If we get a good decision, upside expectations going to be 420, 421. Downside expectations on a hawkish Fed. It's going to be messy. You're talking about, hold on here. In expectation of a downside move to 4,000 right here. 4,000. If you get bearish JPOW, you will likely see a bloodbath down to test that 4,000 level. So downside target 4,000 on bearish JPOW on Wednesday. Upside target on bullish JPOW 421 on Wednesday. I fully expect us to trade up into dealers to help you over the weekend. Get up here and then possibly a pullback to retest this prior low back here on Monday. But I want to warn you guys. Even with Jerome, right? This trade to the upside does not clear bulls. Let's say you get JPOWs like, yeah, we're not bearish, we're not hawkish. You get that squeeze up here, just another excuse to go to the downside. You have to be above that 421 to even consider being out of the red. And even then, your weekly trigger is at 430.58. You need to be above this as well. Excuse me. This will be up here. This will be at 428 here. You need to be above 430 to even get out of this mess. If you're a bull, you need to be above 428, 430. You have a lot of work up here if you're a bull. Whole ton of work if you're a bull. This is a disaster for bulls. Bulls need to be above the hourly, above the daily, above the weekly, then shit tons of consolidation to get the daily up here, get the hourly to race up to even consider correction to be over, doom over for bears or for bulls. This is very bad, man. Like this kind of stuff here, when you look at that trigger screen right there, this cross is not good. If you are a bull, right, there is no like long-term, oh my, like we're bullish trade for you unless price gets above the weekly, the daily, and it's reordered like that. Price, hourly, daily, weekly. Until you get that, there is high risk in this market. And any downside moves will be preceded by squeezes to the upside again. So I guess the only thing I can leave you with would be risk adversive. If you are not risk adversive and it does bloodbath on you, that there should be a squeeze up to the upside at whatever point that is. If you see like a bloodbath into Monday, it should squeeze straight back up into that daily trigger, and you should be given an exit out of the market at some point. And sellers are gonna use that daily trigger to their advantage over this weekend into Jerome Powell's speech next week to try to force that daily trigger down through that monthly trigger. So be very careful in the next into the next week. The next I want to say the next 3 sessions, Monday, Tuesday, Wednesday, by 3 p.m., you're going to find out if this market is going to go down in flames. So today's Friday, right? Friday, Saturday, Sunday, Monday, Tuesday, Wednesday. By Wednesday, you have a high probability of finding out how fucked this market is going to be, how much panic jumps into this market, how much scared traders, scared investors, and how bad does it actually get. The setup is there, though. The setup is there for bears to destroy this market. Not correction, but to destroy it into the end of the year. So we'll be paying close attention next week into that report on Wednesday from the Fed. I am getting more hawkish on the Fed heading into Wednesday. I just read an article from CNBC that said, don't expect the Fed to be hawkish. I am on the other side of this. I think I'm not on the side of doom and gloom from the hawkish Fed. I think the Fed is going to get more hawkish. Does that imply that the market's going to get on a ball of flames? Not necessarily. But it does imply, for me at least, that he's going to say higher for longer and emphasize it even more on Wednesday. So I'm not looking good. It's not looking good from my perspective from Jerome Powell. Since I hate puts, yeah, the idea here is that I want to sell the daily trigger. That's what I want to sell. That's all I want to sell, daily trigger. I've got no interest in selling anything but that daily trigger. Zero. No interest in selling anything but the daily trigger. That's it. Only thing I'm trying to sell here is daily trigger. Not trying to sell any inter-day trade and stuff. Just daily trigger. That's it. I've been there. I've lost 6 figures trying this. I've tried to buy puts. I've gotten smoked for 6 figures multiple times. We wake up Monday morning and we're trading that daily trigger, and you disappear and I don't. I'm the one that has to eat that shit. So I end up eating. If you've never lost 6 figures, you don't understand what that's like if you haven't. If you've ever lost it in one go, if you've ever gotten squeezed out, if you've ever gotten a real true margin call, you don't ever want to experience that. So am I buying puts here? Fuck no. I know that we can wake up Monday morning at 4:30. I know that we can. And if we wake up at 5:30, or we wake up at Monday morning at fucking 4:30, I'm going to get squeezed out. So absolutely not. Patience. Don't care about blood. Don't care about the weekend doom. Don't care about Monday open. Only thing that I care about is selling that daily trigger. That's it. Sell the daily trigger. It's all that matters. I got to say it. Sell the daily trigger. That's what matters. It is most important, regardless of price, I assure you. You're going to have dealers buy this market over the weekend into about 6 a.m. on Monday, and then they're going to try to sell it on you once the cash market begins. New York opens at 4 a.m. By 4 a.m., 6 a.m., they'll try to start selling it on you again. But for next week, that's what I got for you. Look for that daily trigger. Whenever that squeeze happens on that daily trigger, it's going to get nasty. You're going to see that squeeze is the one to sell.